Hello student, today I am going to start a new chapter, that is nature and valuation of goodwill. So let me explain what is goodwill. Goodwill means reputation. Goodwill means reputation. If we will compare a newly established business and an old business, we will see the number of customers visited to old business is more than new established business, because that means in the old established business they have good name, they have a long contact with the customers, they are providing good quality of products, whatever it may be. That means this is known as reputation, means through which the more number of customers generally come. So this is known as the goodwill. So goodwill we cannot see, because the reputation we cannot see, but we can get the benefit from it. So I have prepared some notes about the goodwill, that let me explain the goodwill. So I wrote it here. What is the meaning of goodwill? Goodwill means, here I wrote it, it is the value of the reputation of a firm. Reputation means which is means well connected. People always, or customers always think in favor. Always they give their positive view. That is known as reputation. Always they visit to that business. Always they are ready to buy product from that business only. That is reputation. In respect of the profit expected in future. Future means, suppose if it is an old business, because for a long period of time, suppose they are doing business in the market, and they are earning profit also. So no doubt in future also they earn profit, because they have created a good fame in the market. Their reputation is positive. No customers, that means, say about any negative way about that business. So generally a well established business develop an advantage of good name. Well established business means what we can say, that means a business which established for a long period of time, they have created a good name, reputations, well connected with the customers. That is advantage of good name, reputations, and wide business transactions. Wide business transactions means large number of transactions. Large number of transactions generally happens when more number of customers visit to the business. Clear? So this helps business to earn more profit. So you see now, whenever more transaction, more number of customers will come. So no doubt there will be more profit. And more number of customers, when they will come, when the customers, they will happy. They have strong belief. They will, that means, not go to any other places. They always visit to, frequently they will visit to that place, that means that business. And this helps business to earn more profit as compared to newly established business. Whenever a new business will establish, and the old business will earn more profit, because they have long, that means, connection with the customers, they have well relation with the customers. That is, so what we can say, that goodwill we cannot see. We cannot see the goodwill. Clear? There are two type of assets. One is tangible, another intangible assets. So goodwill is coming under the intangible assets. We cannot see the reputation of a firm. We cannot see, but the firm will get the benefit of reputation or goodwill. So it is an intangible asset. We cannot see it, but the benefit it can be realized. It helps in earning higher profit. Whenever the firm has a good reputation, good fame in the market, large number of customers they will come. Whenever large number of customers they will come, they have, that means they will earn more profit. This is the meaning of the second point. It attracts customers to visit business frequently. Frequently means again and again. So the customer will visit to business again and again when they will satisfy, or they have strong, that means, belief or faith on the business, because they are in well connected for a long period of time. It is subjective, as it depends on the assessment of the valuer. Assessment, there is no, that means we cannot say the goodwill will be fixed. It is this fixed value. No. Subject to the, depends on the assessment of the valuer. Valuer, suppose you are a customer, your valuation, how much you are giving the importance, how much you are, that means considering, that will be, that means your goodwill, the calculation of goodwill from your point of view. That is, suppose different valuer means those who make the, that means value, those who calculate the value. So each and every person, so the customers, they have different angles, that means calculate the value from different angles. This is the point. It is subjective as it depends on the assessment of the valuer, how they are making the value, how they are calculating the value, from which angle they are going to calculate the value. Then what is the need for valuation of goodwill? Why we are calculating the goodwill? What is its need in the partnership firm? First, I wrote it here. In the context of partnership firm, the need for valuation of goodwill arises in the following cases. Where? First case, changes in profit sharing ratio among the existing partners. Changes in profit sharing ratio means, suppose there are 5 partners. When they started the business, their profit sharing ratio was equally, means 1:1:1:1, means equally 5 partners. Now they want to change it according to their capital ratio, or they may change, that means want to change any other ratio. So whenever there will be change in the ratio, no doubt some partner they will be benefited and some partner they will sacrifice. So in order to, that means calculate who is sacrificing and who is gaining, on that basis we have to calculate the value of goodwill. Clear? Then admission of a new partner. When a partner will, that means join to the firm. So first of all, let me explain. Means when a partner, when a newcomer, new person or new partner will join to the firm, when he will think that this firm is earning profit, then only he will join. So whenever he will come to the business, no doubt the old partners, some partners or maybe old partners, they have to lose something, because number of partners will increase. So old partners, some partners or all partners may sacrifice and the new partner will gain. So they will compensate it. So besides his capital, means he will bring some amount for the goodwill, premium for goodwill, what we can say, that is admission of a new partner. Remember one thing, when a partner will, that means in the admission chapter, you will know in detail. Retirement. Retirement means when there is any old partner, he is going to take the retirement from the business. He will say that I cannot continue due to some reason, or he want to leave the firm. So in that cases, that means as he was the old partner, his share of goodwill will also be calculated, because the before the final settlement, final amount, it will be calculated each and every amount from the profit point of, from the profits, what will be share of profit, what will be his interest on capital. Suppose he was working as a, that means partner, that means working in the business, so what will be his salary, what will be his commission, everything it will be calculated and it will be given to him. That is at the time of retirement of a partner. Then death of a partner. If a partner will die, that means by the time also the valuation of goodwill is needed, because his family members or legal heir, that means he or she may claim the due amount from the firm. So when the due amount from the firm, it will be calculated. So by that time the valuation of goodwill also be needed. Then dissolution of a firm. Dissolution, what means? Dissolution means when the firm will close, when they will, that means they want to that means stop their business. Firm involving sale of business. Suppose when a business, it will be sold. As a going concern means, suppose the business will continue, but it will be sold to other firm. Means when other firm will buy another firm, so by that time also we have to calculate the valuation of goodwill, because when the goodwill it will be calculated, how it will be calculated? One thing, it is the net assets. Net asset means, suppose a firm want to buy another firm. So before that means buying the firm, they will calculate what is the value of assets and what is the value of liabilities. So net asset it will be calculated. Clear? Suppose net asset from before, that means calculating the net asset, they will see each and every aspect, the value of, that means all assets, land, building, plant, machinery, furniture, everything, and liabilities also. Then they will that means they will consider how much amount it will be paid. Suppose the net asset value is 50 lakhs, but purchase consideration will be 70 lakhs, means 20 lakhs more. That 20 lakhs it will be treated as goodwill. That is dissolution of a firm involving sale of business as going concern. Going concern means the business will continue, it will not stop. Then amalgamation of a partnership firm means when one firm join to another firm. So in that cases also the goodwill value will be calculated, because one firm will mix with other firm, they will jointly now do the business. So in this case also, that means goodwill is calculated. Then classification of goodwill. What is the goodwill calculation? That is, one is purchase goodwill. Purchase goodwill means we cannot purchase it because it is an intangible asset. It cannot be purchased. It cannot be sold. But purchase, what explain it means, purchase what indicating means when a firm purchase another firm, the extra amount paid more than the net asset is known as purchase goodwill. Clear? Just now I gave one example. Suppose the net assets value is 50 lakhs, but they have agreed that 70 lakhs it will be paid. So 20 lakhs more. So at the time of purchase of one business, whatever the extra amount it is paid, that is known as purchase goodwill. What is self-generated? Self-generated means it is created by, that means firm itself, due to good location, due to their sales policies, due to, that means their good name, whatever it may be, that is self-generation, that is self-generated goodwill. It is an internally generated goodwill which arises from the favorable location. Favorable location means the business is located in a good places, easy to reach, near to the railway stations, near to the bus stand, or it is at the heart of the market or the city. So everyone can reach there. That is favorable location. That is good location. Efficient management, how they are managing the business, their management procedure, they are very well. That means one is happy with their management system. That is efficient management. Good quality of product. This is very important. Good quality of product. Whatever the product they are dealing, it is qualitative. Means from the customer point of view, they have no complaint. They are satisfied. They are happy with the quality of the product deals by the business. That is, they have strong belief. The customers, they have strong belief about the quality of the product. That is good quality of product, due to which firm is able to earn higher profit. So in one sentence we can say, due to any reason, any of these reasons, if the firm is able to earn more profit, that is known as goodwill. It may be good location, it may be efficient management, it may be, that means the good number of transactions. This is known as, that means what about the goodwill. In the next video I will explain you what are the methods of valuation of goodwill.